A very good afternoon. You're watching Your Stocks in the Mumbai News Studio. I'm Ekta Batra. Joining us today, we have Ruchit Jain, who is the research analyst, lead research at 5paisa.com, and Sharad Avasthi, head PCG Research, to answer all of your queries on the fundamentals as well as the technicals. Well, it's turning out to be a session where we are just about seeing some amount of consolidation. Maybe there is some amount of repetition ahead of the US CPI data for the month of August, which will be released today. So there is an expectation that there could be some amount of a softer momentum on a month-on-month basis from that 2.9% level that it had hit in the month of July. So if that does come through, then that would be a positive read-through for the Fed that meets on the 17th and 18th of September. But nonetheless, the Bank Nifty just about lower by around 195 odd points. The mid-cap index holding with a gain of around 0.3%, but has given up its gains from the day's high at this point. Ruchit, let's start with you. Afternoon, gentlemen, but Ruchit, over to you. What is your sense in terms of today's trade?
Yeah, hi, very good afternoon, Ekta, very good afternoon, Sharad. Well, we believe that markets would go through some consolidation in the near term. Last Friday, when we had seen that sharp correction, then the momentum readings had given a negative crossover, but the index has not broken its important supports, which are around 24,700 to 750. So usually, whenever such situation pans out, market goes through some time-wise corrective phase. So upside seems to be capped at least for the near term, where 25,150, 25,200 would be acting as a resistance, while 24,700 is where the major support is placed. So I think maybe we would test that 24,750, 24,700 once before before looking at any kind of directional move. So there could be some short-term consolidations. Maybe, as you just said, some news-based moves could be there post either the Fed policy, which is on 18th, and till then we might see some consolidation in the index.
Okay, might see some consolidation in the index till then. What is your sense quickly, Ruchit, before we move ahead in terms of specific stocks such as Bajaj Auto, which is the top gainer on the Nifty today, sitting at a fresh 52-week high?
So overall trend looks quite strong in Bajaj Auto. In fact, the high top, high bottom structure is getting continued in spite of Nifty Auto Index not showing any significant movement. So I think when the stock shows such relative strength within the sector, that outperformance tends to continue, because even if you look at the volumes on the daily chart today, and they're quite impressive, much better than the daily average volume which the stock is garnering. So the stock has potential to rally towards 11,900 to 12,000 in the short term, which are the retracement levels. So it's better to ride the trend. If any existing positions are there, I think we should see 11,800, 12,000 level quite soon.
Okay, all right. Well, now we have a couple of queries. We have Mahesh Humbali, who writes to us from Pune. He holds 100 shares of Inox India, which he's bought at around 1,000 odd rupees. He wants to know what to do, whether to hold or sell at these current levels. This is on Inox India. He's currently sitting on a good profit of around 18,000 odd rupees. Well, Sharad, what is your view on Inox India, and do you think that it's a long-term hold?
Yeah, I think the type of products that they have got into, or that they are into, or that they plan to get into, I think it's an attractive space to be in. If you consider LNG stations, the type of expansion that the government has also told around 1,000 probably. And even in green hydrogen, I think where they are expanding, and the cryogenic tanks that they make, I think those are areas that will continue to be in demand for quite some time. The new product acceptance could be the trigger point, but beyond that, I think at current valuations, roughly what it is trading at, 30-40 times roughly is the valuation at which I think the stock should trade. FY26, we expect earnings of somewhere around 31, 32. Based on that, I think at 37 times, it's roughly fairly to fully valued. A bit optimistic, you could consider, maybe 1250, 1300 on the upside. But I think you should use that rally to exit it if you have a horizon of less than 4 or 5 years. I think for the next 2 years, maybe it is fully discounted at these prices. So use the rally up to maybe 1250, 1300 to gradually exit the stock.
Okay, well, it's done exceptionally well on the fundamentals. I mean, on the technicals. In the past 1 year, it's given returns of around 26 odd percent. In the past 5 years, also, it's given good amount of returns. Give us a sense in terms of the technicals, Ruchit. What would your target be on this stock, and maybe your call in terms of a stop loss?
So, Ekta, if we see last 6 months, the stock has seen a broad consolidation in the range of 1100 to 1400, 1450 on the higher side. The stock is now trading quite close to that lower end of the range. So, I think it's better to hold on because the risk reward ratio is favorable at current levels. But yes, I would advise keeping a strict stop loss below that 1100 mark, because if 1100 gets broken, then this entire 5-6 months of consolidation which has happened, that pattern would get negated. So keep stop loss below 1100 and wait for a pullback move towards maybe 1300, 1350 kind of range. And it is advisable to take a review again once the stock comes there.
Okay, all right. Well, now we have another query. We have Unni Krishnan, who writes to us from Chennai. He holds 500 shares of Shyam Metallics, which he's bought at around 830.5 odd rupees. He's sitting on a bit of a loss here of around 1,000 odd rupees. He's a short-term investor. He wants to know the target price. So, Ruchit, this is down your alley directly. It's a short-term call that somebody has on Shyam Metallics. What would you recommend?
So last 1.5 months, the prices have traded in the range of 845 to 765. And we have not seen any kind of high volume action in this period. So basically, until we see any kind of good volumes coming in, we are not expecting any breakout or any positive momentum from current levels. So it's better to, if you are looking for a fresh, very short-term perspective, then it's not in the trended phase. You can look to exit at current levels and re-enter from a trading perspective only on a breakout above 845.
Okay, all right. But in any case, wanted a fundamental view, Sharad. Shyam Metallics has lofty expectations. They want to hit around 40,000 crores in terms of revenue. They have 5-year growth plans in the steel aluminium business. Fundamentally, what's your view on it?
I think across metals, the recent rally is largely covering in most of the positives. Even for Shyam, I think, if you can hold on for a bit longer, FY27 numbers, maybe it does look sensible for another, 10-15% upside. But in the current rally, so much has happened to these stocks. If you consider even FY26 numbers, it's already trading at 15-16 times. So I think, if you have a 1.5 year, 2-year kind of horizon, I think Shyam does not really make much sense at these valuations. If you can extend the horizon, as you're rightly saying, the type of numbers they are talking, if those numbers do come in, then most probably you're looking at an earnings of somewhere around, 110, 120 on the stock. And then if it gets somewhere around, 10, 11 times, then you could be looking at targets of 1,100, 1,200. But that's 3-4 years down the line. And I think in between, you would get a lot of opportunity to buy these stories at much better valuations than current prices.
Okay, all right. Well, we now have Vishnu, who writes to us from Kerala. He holds 5 shares of Godrej Properties, which he's bought at around 3,381. He wants to know the prospects of his particular holding. Well, let's start with the fundamentals of this one. They've recently bagged around 2 luxury housing plots in Gurugram for around 515 odd crores. So there is this large amount of investment which they are doing. What is your sense, Sharad? Do you think that this is one of the better plays within the entire real estate space?
Yeah, certainly. If you look at it in terms of size and the positioning that the company has and the brand value that the company has within the space, I think Godrej is undoubtedly one of the best bets that you can choose. The only flip side to the story in the short to medium term could be that a major part of current year's planned, execution is in Mumbai and Pune, parts of Maharashtra, where we have to see elections also. So there could be some slowdown on that front on that. So, and the pricing as such in most of the real estate companies is not very attractive right now. Though for Godrej, we expect in the long term, the growth to be around, 30-35% for the bottom line over the next 2-3 years. Considering that you have an earning of somewhere around 90 rupees. And I think 33 times roughly, I think it would be fairly valued 2-3 years forward. Optimistic, I think 3,400 to 3,600 could be something you could look at, in a year and a half. But I think that movement should be used to gradually book profits. Unless and until you want to hold on for a much longer period, I think 1.5-2 years, if you get somewhere around 3,400, 3,500, that should be a good level to exit the stock.
Okay, all right. 3,500 should be a good level to exit. But what about you, Ruchit? That stock has given good returns over 40% on a year-to-date basis. What's your approach on this particular counter now?
It's a short-term correction which is going on. In fact, if we look at the Nifty Realty Index also, it formed a high of around in mid of June post, which we have seen some consolidation or correction. So I think we could expect some more dip in the near future, where major support on the weekly charts is placed around 2650. So do not expect any significant run up in the short term. But any dips towards 2650 it comes, then I think those would be good levels where some contra buys should be taken. So we can hold on his existing positions at current levels and look to add more or average out if the stock dip towards the 2650 mark.
Okay, all right. Well, we now have Manohar, who writes to us from Pune. He holds 600 shares of BHEL with an average cost of 212.5. So he's sitting on a profit there. He's a long-term investor, wants to know what to do with this particular investment. Let's start with the technicals. BHEL, given 30% returns year to date in the past 1 year, it's up over 80 odd percent. What's your sense, Ruchit? Is there more to go, or should one probably skim out some profits here?
I would recommend to hold on at least at current levels. The stock is trading quite close to its support of 250, 255, not much far from that levels. So we may see some good bounce back in the near term towards 290 levels. So around 290, 300 if it comes, then those would be the levels where, if not full in, then at least partial profit booking could be done. But these are not the prices where I would recommend to exit, because it is quite close to that midterm support.
Okay, all right. Well, what about you, Sharad? What's your sense on BHEL? There was a big loss which widened to over 200 odd crores in the quarter gone by. What's your sense on the fundamentals?
Yeah, I don't think these are companies where you need to look at, a quarter-on-quarter basis. I think in the long term, the order book accretion has been strong. It's around 135,000 crores. 50,000 crores is still legacy orders, which might drag margins in the current year. But most probably next year onwards, you will not have that opportunity or not have that problem. And in terms of power additions, Vande Bharat, defense, and, gas turbine business, naval ships, that's all the space they are working into. Flue gas desulfurization, or FGD, is another big opportunity that they're staring into. So I think there could be substantial, re-rating happening to this company's numbers over the next, 18 to 24 months. And valuations per se, if you look at the rest of the capital goods companies, I think it's not that expensive, or engineering companies. FY26, we could report somewhere around 7.5, 8 rupees, and based on that 30-35x. I think even conservatively, depending how much of the FGD opportunity gets converted, I think next year, once the margins start going up, you could easily expect it to trade around 40 times. So considering that, I think 300, 320 could be a good level to look at initially. And then depending on the type of improvement that happens with respect to the new order book accretion out of FGD and the margin improvement once the legacy business is out of the book, I think there could be further re-rating happening in the company. So I think continue to hold initially for targets of around 320, 300, and then maybe take it forward.
Okay, all right. Well, on that note, we need to take a short break with the news that the mid-caps have given up a little more in terms of gains. So we're just about higher by around 80 odd points, flattened out for that one. And the bank nifty is under pressure. It's down around 0.4%. So it's a bit of a reversal in terms of sentiment which has taken place. The nifty, which was trading largely range bound, is now showing a cut of around 90 odd points today. So there's been a complete reversal in terms of sentiment, as you can see. So let's see. The advanced decline ratio also turned in favor of the declining stocks. So around 1,800 stocks advancing to around 2,300 stocks declining. Take a break, but more queries on the other side. Stay tuned. Welcome back. Well, you're still tuned into Your Stocks. We have with us Sharad Avasthi and Ruchit joining in on all of the queries this afternoon. Well, like we mentioned, it's completely a turnaround in terms of sentiment that we've seen for the markets. Not too much to write home about. It's probably routine profit taking which is taking place at this point in time. Remember that the Nifty has been trading above those levels of around 25,000. So routine profit taking and maybe some amount of nervousness ahead of the US CPI data as well. Well, Ruchit, would you like to come in on this turnaround that we've seen? The mid caps have flattened out at this point. The bank Nifty is down around 200 points. The Nifty is down around 100 odd points. What's your sense at these levels?
Yeah, so as we pointed out earlier as well, that 24,750, 24,800, I think that's where the major support would come in. the pullback move that we had seen yesterday had resisted around that 61.8% mark, which was in the range of 25,100 to 150. So I am still of the same opinion that we might see that lower end getting tested once of around 24,800 to 750 before we see any kind of directional move or breakout happening.
Okay, all right. Now let's get back to the queries that we have. We have Ashok Khanna who writes to us from Mumbai. He holds 500 shares of Tata Investment, which he's bought at around 1540. So he's sitting on an excellent gain there. He wants to know the prospects of his holding. He's sitting on over 27 lakhs in terms of revenue or in terms of profits at this point. It's a tough one in terms of a decision. So I'm going to ask you, Sharad, first, what do you expect? Do you think that one should probably take some profits off the table or stay stick onto the investments in Tata Investment?
No, I think it certainly does make to get out because largely it is treated as a holding company. And if you look at it, we already have a 36,000 crore kind of market cap, even if we consider, the holding of Tata Capital and NSE also amongst the unquoted investments. Even then, I think it is trading at a fair premium to the rest of the investment companies. 40-50% discount, 40 to 60% is something, even if you are trading at a 40% discount. By that standard also, I think it is trading comparatively higher. And some of the holdings that they have, whether it's a Trent or something else within the Tata group, I think particularly Trent, there the valuations might be a bit sky high. So for them to appreciate further from here normally would be very difficult. So I think most of the positives seem to be priced in, even if you take into account Tata Capital and NSE prices also the way they are quoting. I think the possibility of them making too much out of that is very little. So I think that's over euphoric pricing at this point in time. So it's better that you book profits and get out. I think you'd get much better investment holding companies at much more discounts, and the possibility of corrections here seem to be higher vis-a-vis the rest of the pack.
Okay, all right. And what about you, Ruchit? Tata Investment done extremely well in terms of the technicals?
Yeah, so very good returns. And if I look at the positional chart in last 1.5 years, whatever corrections were there, we have not seen the stock going even below its 40 weeks exponential moving average support. And that support is now shifted to 6,000, 6,100 odd range. So the major support base for the stock itself has shifted higher. And since his buying price is quite low, so I think he has a good margin of safety to hold on to at least some of the quantities. So I would recommend that to book partial profits over here since it's getting very good gains. But on the rest of the positions, you can keep a stop loss of 6,000 and wait for some more price action happening.
Okay, all right. Well, we now have Parvati who writes to us from Mumbai. She holds 10 shares of Siemens India, which she's bought at an average price of around 6,852. She's asking if she should accumulate more of the stock. Ruchit, you first on this?
Short-term corrective phase is there since it was quite overbought of that after that run-up which we saw in the first half of this calendar year. And the major support on the weekly charts is coming around 6,100 kind of range, 6,000 to 6,100. So hold on to existing positions, but if you want to average out or buy some more, then in case if you get that range around 6,100, then I think those would be very good levels where averaging could be done, where the risk-reward ratio would become favorable.
Okay, and what about you? Sharad, what would you recommend on Siemens?
Yeah, I think it's an excellent company. I think the long-term trajectory should be good. Recent order book correction has been strong. The demerger of the energy business should also play out very well. And the data centers, transmission and distribution, and e-vehicle business, as well as the smart unit business, that should all do very well in the long term. But in the short term, I think it's already trading at 65x, expecting 20-25% CAGR. So based on that, I feel maybe, these are not valuations where you would be comfortable buying just now. Wait for, corrections of anywhere between 15 to 20%, and then maybe start nippling into the stock gradually and accumulate over a period of time. Because of these valuations, I think ideally a holding period has to be 4 to 5 years to make money out of this. So, and these are all long gestation projects that the company is already working out, though they have committed one of the largest capex in the recent past of around 1,000 crores. And I think in addition to that, some new capacities also come up at the end of the calendar year. So I think these will take some time. I think most of the positives are positively factored in. Order book accretion can gain some traction over the next 1.5 years. But once this demerger happens and we have the streamlined businesses, how the operating margins, etc., operate, I think we need to give it some time. So try starting to accumulate on a dip of around 10 to 15%, and then gradually accumulate if it does correct lower. I think that would be a prudent strategy. Otherwise, buying at 60, 65 times 2 year forward doesn't really make much sense.
Okay, all right. Well, on that note, Sharad, actually, let's get in a quick word on Siemens from Ruchit. Ruchit, before we wrap up, your call on Siemens?
Well, I covered that earlier.
Okay. Okay, yeah.
Hold on the existing positions.
Any other stock which you like within the space?
So I think overall, if I look at a bit longer term charts, then Larsen and Toubro is also looking quite positive if one is looking to buy from at least 1.5 years perspective. We witnessed a good trended phase in till January 2024, and post then it has been into a corrective phase, but this entire correction is more of a time-wise correction within an uptrend. So price-wise downside seems to be very limited, and once this time-wise correction gets over, I think we should see a resumption of the uptrend. So Larsen and Toubro also looks good if one is looking to accumulate from a bit mid to long-term perspective.
Okay, all right, Ruchit as well as Sharad, we are going to wrap up on that note. It's all the time that we have on the show. Closing bell is next. You please do remember to email us your queries. We'll address them with our experts. We'll leave you with some opinion by Gautam Shah of Goldilocks Premium Research.
That the market is looking a little exhausted. I think the up days are not as strong in terms of momentum and participation. In fact, the down days last week has been a lot more stronger. So I think the numbers are very clear from a short-term perspective. 25,150, I think, is an important barrier, which we hit yesterday at the highs. And 25,500, 600, according to me, is a sort of a ceiling for now. And I'm not looking at any number beyond the same for the time being. On the downside, I think the 24,800 area is an important support. If that were to break at any point of time, you could possibly see a 5% dip on the Nifty.